Hello traders and welcome to another video review. Today is Friday the 13th of the August 2021. Let's take a look what do we have in the Forex calendar at the end of the trading week. As you can see, some data had been released from China, for example. Those data were industrial production, retail sales, unemployment rate and fixed asset investments. So we will take a look at the gold market today. Some data are of course scheduled for release during the London session, but as you can see, there isn't many of them will have a greater impact on the market. The same situation is during the London session, New York session, when the data like current account, import price index from the US, leading indicators from the UK to Michigan, consumer sentiment index will not have much impact on the markets today at all. So pretty quiet day on the financial markets from the economic data release side, but I guess that this is just one part of the coin flip. So we just need to wait for any kind of comments, maybe some kind of other triggers, political, for example, triggers that will give us some kind of a trigger for the increased market volatility. So as I said, let's take a look. First, I think we should take a look on gold. What is going on the gold market, because we had recently kind of a dip towards 61% of the Fibonacci retracement of the whole wave up, 1689, and you can see that there's a kind of a pin bar here on the daily time frame chart. So we can see this long shadow, this is a lower shadow, and we have a bounce towards the key short-term supply zone, 1750, 1760. This is the supply zone. So as you can see, we are already trading there. The bounce was from the extremely oversold market conditions. Right now, despite this bounce, the momentum is still negative. The momentum is still at the level of not even 40 points. So it's not even neutral, it's still negative. Bears are in control of this market, still in control of this market. So we should expect some sort of the reaction here. Yesterday we had a very interesting candle here, long-legged doji, so we might see some kind of a reversal here, or maybe consolidation, because it looks like this situation won't last for long. Anyway, we are still trading below this trend line. However, it was violated before. It's a nice trend line, long-term trend line, but it was violated before. So what I would like to do now is to shorten this trend line from this high to this recent low, high as well. And this is how it looks like right now. So that's our trend line here, the blue one. And yeah, we are still trading below this trend line, even if it's adjusted to the newest data. So as long as the market is trading below 1760, outlook is still rather bearish. Spot silver market, if we talk about gold, there you go. Our previous scenario was very precise, and as you can see, the market did what we expected from it to do. So we can cancel our old scenario very well. The level of 23.48 has been hit, even violated, and that was the point of the whole scenario. So very nice. Now what's happened? The situation is kind of similar than this one in gold. We have a new low at the level of 22.32, and as you can see, right now this level of 24.62 is a technical resistance. It's still technical resistance, and the recent lows around this level will be working as a resistance as well. 24.41, 24.64. So this is a resistance as well. It used to be very nice support, but right now price is trending below it, so it's a resistance. Next support 21.84, 21.63. As you can see, the market conditions are now extremely oversold, and the market is trying to bounce. Despite the bounce from 22.32 to the level of 23.48, so it's more than $1. The momentum is still negative, extremely oversold, and the bears are in charge of this market. So please watch out for another move lower. This is the old trend line. We don't need it again. So that was the last important support. And then please take a look at this support, 21.84 or 21.63. This technical support is the low of 2020. Sorry, is the low of the September 2020. The lows of 2020 is even lower. But if we will break below 21.63, then we have a new low since September 2020, and that's not really good for the bulls, because the next important support, I'm trying to find something. If this one is broken, I guess maybe somewhere around 1962, 1905. So that's the next target in the price of the spot silver. So no wonder there is such a big down shadow, lower shadow here, because bulls will protect this level, because they know that, you can see the same action was here, because they know that if they lose 21.63, we can go below the 20 levels, so 19, 1940, 1905, right? So please keep an eye on this level, 21.63, if we ever get there on the silver market. So that's the silver, that was the gold. Let's take a look at our favorite one, which is the euro dollar for today. What is going on here? We had a nice move to the downside recently. As you can see here, we stabilized our move down. 1.1704 was the low, which is the important, of course, low and important technical support, but the bounce was around the level 1.1752, and since then we are consolidating inside of this tight range here, tight range between these two levels. Momentum is still negative, momentum is still weak, bears are in charge of this market. We should expect the market to go even lower below 1.17 level. The next target for this market is 1.1613, 1.1604. We have broken the trend line here. So that's the trend line. We have definitely broken below it. So right now we just wait for the sub 1.17 levels in order to hit 1.1630. And if we are talking about the euro dollar, let's take a look what is going on the USD to the Canadian dollar. We didn't see this one for some time. So what is going on? As I mentioned before, we had a bearish divergence between the momentum, which was in the extremely overbought conditions, and new high made above the level 1.2782. And I have mentioned it that please be careful with this rally, because it's only ABC rally, three-legged rally, which doesn't mean necessarily that this will become an impulse. So that's the wave A, B and C, and that's it. Divergence into wave C, and we have a correction. The correction was towards the level of 1.2418, which is 61% projection of the wave A measured from the top of the wave B, and since then we have a bounce. So right now we can remove this this projection. We have a bounce towards the level of 1.2588, but we are still below the key technical resistance, 1.2647. The market still moves inside of the channel, but any violation of the lower channel line will definitely be considered bearish, and right now this correction is bigger than the biggest correction here, as you can see. So this correction is more than, I don't know, 3%. Yes, it's exactly 3%. So so that's about it, 3% correction, and right now we might see another move to the downside. Let me just quickly place some Fibonacci retracement levels. Right now we almost hit 50, 38 is done, so we don't need it anymore. So we can remove okay, we can remove the 38%. We need only 50 and 61. So the next target is 61 at 1.21 23.15, and this still looks positive. This still looks bullish, but please notice that any violation of the neutral level, which means any violation of the channel, basically around 1.24, I think 1.24 is the level, or 1.2408 even, so that will be 50% of the Fibonacci retracement. Any violation of this level will switch the sentiment to the negative sentiment, and we will penetrate the lower levels on the US dollar to the Canadian dollar. If there is breakout above 1.2647, 1.2655, there is a chance to test the recent high from the July 2021, located at 1.2807, before any deeper pullback will take place. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.